Revolut wins full Australian banking license, commits $280 million. Revolut has secured a full banking license in Australia and committed $280 million to compete with the country's four dominant banks, according to a July 21st report from Cointelegraph, citing the company. The license moves Revolut from a restricted operator running prepaid and payment accounts to a licensed bank that can hold insured deposits and lend under its own authority. The bar Australia sets for a bank license. Australia's banking sector is one of the hardest for a newcomer to crack. The Big Four, Commonwealth Bank, Westpac, NAB, and ANZ, hold the large majority of the country's deposits and mortgages, and the Australian Prudential Regulation Authority, APRA, grants full authorized deposit-taking institution status sparingly. Several digital-only challengers that won licenses in earlier years later handed them back or were absorbed after failing to reach scale. A full license changes what Revolut can do on the ground. Restricted or partial approvals let a firm move money and issue cards, but they cap how much customer deposit it can hold and bar it from lending against those balances. With full authority, Revolut can take insured deposits, offer its own credit products, and keep customer funds on its own balance sheet rather than parking them with a sponsor bank. The $280 million figure signals capital set aside for that build, not a marketing budget, a pattern of chasing regulated status. The Australian approval fits a broader Revolut push into regulated banking, rather than sitting inside the lighter e-money frameworks that carried it early on. The company already operates as a licensed bank in the European Union through its Lithuanian license and has spent years pursuing a UK banking license after a long application. Each regulated foothold lets it hold deposits locally, extend credit, and reduce its reliance on partner banks. That distinction matters for anyone comparing where their money actually sits. Under a full banking license, eligible deposits typically fall under a national protection scheme. In Australia, the Financial Claims Scheme covers deposits up to a set cap per account holder per institution. Balances held under an e-money or payments license usually do not carry that guarantee, and instead depend on how the provider safeguards or holds client funds. The move to a full charter is the difference between "we safeguard your money" and "your deposit is insured." The crypto and card angle. Revolut is not a pure crypto company, but it has run in-app buying and selling of digital assets for years and issues Visa and MasterCard debit cards across its markets. A domestic banking license in Australia gives it a regulated base to expand card issuance, local currency accounts, and any future crypto features under the same entity that holds deposits, rather than through a chain of third parties. For users weighing a mainstream fintech against dedicated crypto cards, the trade-offs are worth naming. A licensed bank offers deposit insurance and direct account access, but a fintech's crypto layer is usually custodial. The provider holds the assets, and access can be paused during an outage, a compliance review, or a solvency problem. That is the same counterparty exposure that separates custodial card programs from ones that let you spend from a wallet you control. Neither model is strictly better. They answer different questions about who holds your funds and what protects them. The competitive read is straightforward. Australia's incumbents have weathered challenger banks before, and holding a license is not the same as winning customers. Revolut still has to convert app users into primary account holders in a market where the Big Four control payroll, mortgages, and everyday banking. The $280 million is the entry fee, not the prize.